All right, a lot of content tonight. This video, I'm going to show you what it's going to look like if Tesla invalidates. So the pretty standard move here is obviously 5 waves. And it looks like that's going to happen. But what would it look like if it invalidated the move? If you already have position long in Tesla, then you're going to want to know this because you're going to want to know what you need to do if this happens tomorrow. Because you just never know in this market, and you want to know worst case scenario if you already have a long position. So I actually erased all the fourth wave stuff. This is what it looked like. If we end up getting an impulse down here, then it's going to probably go to at least 280. So go ahead and draw it up for you. We have 1, 2 here. So we got a parallel line here. This breaks it, but then this comes back into it. So this is likely a nested 1, 2. So we can now draw parallel line from here and look at where the 1.61 fib is. The 1.61 fib is right around where it's at overnight, which is right around 306, 307. That would only be wave 3 of the third wave. So 306, we would likely get a bounce back to the 0.23 fib right around there. So 306, bounce back maybe to like 310 to 315. And then I'd be looking for a fifth wave down to let's just say it goes to 313. Fifth wave down here to 288. And then I'd be looking for another bounce. That'd be the end of the third wave. I'd be looking for a bounce probably a little bit bigger, maybe come back up here and test 400 or 300. And then I'd look for one more move down, probably to about 280 or so. There you go, 280. For 5 waves, that's where I would expect. Right now, the 20 DMA is at 268. I already have invalidation as past 303.51 because if this is ABC or WXY, then I'm looking at the 1.61 fib of this right here, which is at 303.51. That's going to be a warning sign if it goes below 303.51. And then I'm going to start switching my attention to this count right here, potentially shorting and making some money to the downside. So if this plays out, then you're probably looking down here at the 20 DMA. This would be a little bit short of it right now. 20 DMA is at 270, but it's always possible that this slides even further. I haven't looked at the GEX levels. I will say I think this is unlikely. I don't think this is going to happen, but be ready for worst case scenario because I think the psychology of the market right now is everyone is just waiting for this dip to be done. And so this is like a perfect time for everything to go down more, to really, really nail these people that are, favored long. So if you are already long Tesla, I would definitely take note of this count. This would only be wave 3 of 3 if it hits 307. And if it invalidates below 303.50, so I'd be watching that. This is also a demand zone right here. 322 all the way down to 301.20. So again, if it drops below that, it went right through that demand zone and it invalidated the ABC move. Then you're probably looking at that 5 waves down to 280, potentially even down here to the 20 DMA, and that could be an invalidation because that would be 5 waves. Another thing to look at that's interesting about this move, while I favor the 5 waves up, look at this right here. Going back to this move. So this move right here did not break the parallel line, and it hit a little bit between the 1.23 and 1.61 fib. Now, if we go here, I already have it drawn up here. Look where this hit. This literally hit the very top of the parallel line and then came down. Rejected that parallel line. And this hit right between the 1.23 and the 1.61 fib, the exact same as this. The only thing that would be off about this, well, actually, it wouldn't be off. It's the exact same thing. No. Yeah, it would be off a little bit. The only thing that's off about this is the fact that this never finished 5 waves up. But I'm just showing you a different view for people that are looking at this bearish. It's good to know if you are bullish on the stock, what's going to happen if you're wrong. So again, follow that 5 waves. Maybe even have this drawn up. And you can just follow it. And if it happens, you know that you're wrong. Do you necessarily want to sell the invalidation level? Yeah, it's kind of up to you, I guess. If you're already in and you're willing to wait out and you're willing to risk coming down here all the way to 280, I know that's a big drop. But after this happens, you're almost certainly going to get a move like this back up to like probably, let's see, 280. You'll probably get a move at least back up here to like 317 and potentially all the way up here to 340. Even if it goes all the way down to 280, it's going to use that 20 DMA as support and then bounce back into this supply zone. And so for that reason, if you're down, you are taking a big risk if you don't stop out right here, but you might be able to salvage the move on the bounce. So I just wanted to do one more video. I was looking at this for myself at different angles, and this is the bearish angle right here. This is what bears will be using as their chart. I still favor that. But if this happens, you know the move's over with. We go straight to 280 over the next couple of days, the move is over with. And it's time to get ready to short on this move right here. So that's it for this video. Just wanted to make that clear. Kind of relates to the last video I put out on how to trade it. But if you're already in, just knowing what could happen against you is definitely going to be beneficial.